Good day dear viewers, and welcome to Financial Documents. This is lesson 2 of the Osborne books, chapter 2, so let's get started. Objectives. We're going to look at documents in the accounting system, we're going to look at trade discounts, we're going to look at how to calculate VAT from totals figures, we're going to look at settlement discounts, we're going to look at authorization and other checks, we're going to look at coding, we're going to look at keeping financial records and documents. So this is an overview of the accounting system between the buyer and seller. So sometimes the seller may be asked to provide a quote, especially for larger objects such as construction objects. Now obviously the quote should reflect the actual invoice that they sell. If they don't, then there has to be a good reason, such as if it was a construction project, for example, there may be adverse weather conditions to be taken into account, etc, etc. So anything like that could affect the quote, but if the quote is significantly different, then obviously the buyer would have some kind of legal redress, which is why quotes are asked for in advance. Purchase order. Now the purchase order is raised by the buyer and sent to the seller, and the number sent to the seller, and the seller will then quote this on the invoice that is sent back. The reason for this is that when they get the invoice, then they know that it's a valid invoice and not an invoice that's just been sent to the buyer. Now if it was just an invoice so if the buyer just received random invoices, how would they know that this was a legitimate invoice? Well, if it's got the purchase order number on it, then they know that it's been raised by them, sent to the seller, and then they know that this is a legitimate order. Obviously purchase order numbers, there's specific numbers that have been raised by the buyer, so the buyer should be able to recognize them. Delivery note. So the delivery note is sent with the items of goods that are sent. Now the delivery note will have the items that have been picked by the seller and then sent to the buyer, and if there's any goods missing or anything, then these will be itemized on the delivery note as well. Any goods that the buyer asked for but was not in stock, and then what the buyer can do, can tick them off and then see what's outstanding, and this is a good check for the buyer. And yeah, that's the purpose for it basically. And then if there's anything missing, obviously they need to let the seller know, and then the seller can issue a credit note. An invoice is a request for payment. So obviously this is the equivalent of a receipt for non-credit purchases. Sorry, for credit purchases. So for non-credit purchases, it's normally a receipt. For credit purchases, an invoice is sent, and a request for payment is then due. Credit note, sorry, a request for payment is made, and then the payment is then due. A credit note is basically the opposite of an invoice. So you can't delete an invoice, so therefore you issue a credit note. You can't delete it for audit purposes. An invoice is always valid. The credit note basically is the alternative document to reduce the amount on the invoice. So for example, if there's a good that wasn't in the basket of goods that was sent, then a credit note would need to be issued, not a different invoice. The statement of account, this shows a list of all the outstanding invoices that need to be paid. It's normally sent at the month end so that the buyer knows what's outstanding, and they could deal with whatever's outstanding basically. A remittance advice. A remittance advice is very important, and it lists all the invoices that have been paid. So sometimes you might receive something in your bank account. If you don't receive the remittance advice, then you don't know what it's for. So for example, we received £615 this week. I didn't know what it was for because the remittance advice wasn't sent with it. Apparently it's for overpayment of goods, so they returned the money to us, so that's the reason. So basically the remittance advice just says what it's for. Okay, so quotation. Quotation, this is what quotation looks like. It's got the itemized list. Now what you see with all of these, they've got all these documents. They're very similar. They just got slightly different information, but you'll see on the address on most of these are the same. The items are the same or similar. What's different is normally the numbers that are relevant. So here you can see this is a quote number that will be relevant. That's the most relevant thing. Really, that is different from it's not the most relevant thing, it's the most different thing from the rest of the items. sorry, from the rest of the documents. Let's have a look at the purchase order. So the purchase order number obviously needs to be sent to the seller, and then the seller can put this on the invoice, and then the invoice will be sent back with the correct order number, and then the buyer knows this is a valid order. So this is an invoice. It's got similar information, what it was for, the address of both parties, the buyer and the seller. It's got an email address, but this invoice number is the most important thing. That will be put onto your accounting system, and then your accounting system will often recognize if they've sent another invoice for the same thing, because the number will be exactly the same. So also the amounts will be the same as well, and then you can figure things out normally like that. But normally the accounting system won't let you raise an invoice twice for the same number. It will warn you definitely, and then you'll have to change the number basically, otherwise it won't go through normally. Credit note, so this is credit note. Again, it's got similar information. Normally begins with CN, the numbers, not always though. It depends on the actual company. Where's the credit note number here? I can't really see it. This is the invoice number, invoice value, payment due, PO number. They've got a credit note number somewhere, but I can't really see it. But yeah, normally they have a credit note number. Let's have a look here. Statement. So this is a statement. It lists all the invoices that are due, days overdue, the amount outstanding. So this is another. This is a statement, and this is what it looks like. It looks slightly different to the other document actually, because it lists all the invoices. Whereas the rest of them will have invoice numbers, but it will have this one will have the customer account number. So discounts. Let's have a look at discounts. So this is a trade discount. So calculate the price before VAT first. This is how you work out a trade discount. So 100 times 2.36 gives 236. So these are the quantity of items. This is how many we're buying. So this is the total value. Now calculate 10% of that. So 236 times 10% is 23.6. Take away the value, 23.6. So you take away that from the total. You get 212.4. Then you calculate the VAT on that. 212.4 times 20% equals 42.48. Calculate the total invoice price. So it's that 212 value time, add the 42.8 of VAT that you just worked out, gives you the total price with the discount. So this is what it would look like on an invoice. So you've got the goods total, you've got the trade discount, you've got the net, you've got the VAT on top of that, and then you've got the total payable.